Let me ask you something uncomfortable. If you owned NVIDIA during the artificial intelligence boom, did you actually understand what you were holding? Or were you just riding a chart? Imagine it is the year 2072. Someone looks back and asks, what might be the simplest question in finance history? Should you have bought NVIDIA? Should you have held it? Or should you have sold? Most people think that question is about timing. It is not. It is about whether you recognized a revolution while you were standing inside it. Because here's the part nobody likes to admit. Many of the people who made money on NVIDIA still misunderstood it. They believed they were buying a high-growth technology stock. What they were really buying was the foundation layer of a new economic system. And those are two very different things. In the 2010s and the early 2020s, NVIDIA looked relatively ordinary. A premium GPU maker, a favorite among gamers, a company benefiting from esports, content creation, and steady improvements in graphics technology. It was respected, even admired, but it was not viewed as a strategic pillar of the global economy. Then artificial intelligence left the lab, language models began writing, image models began generating, systems started predicting, simulating, optimizing. Businesses rushed to integrate intelligence into their workflows. Governments began speaking about compute as if it were energy or oil. And underneath that explosion was one constant: compute. And NVIDIA supplied it. Between the early 2020s and the early 2030s, demand did not simply rise, it accelerated. Data centers expanded at a pace that strained supply chains and energy grids. Cloud providers quietly transformed into artificial intelligence infrastructure platforms. NVIDIA was no longer selling gaming performance. It was selling capacity for cognition. The stock price followed. Markets were no longer pricing earnings alone. They were pricing inevitability. The belief that artificial intelligence would expand without friction, without constraint, without limits. And inevitability is a volatile asset. In hindsight, the first phase looks easy. Buy early, hold, let the wave lift you. But revolutions do not create one kind of investor. They create three. The first group buys before the narrative is mainstream. They see asymmetry, not certainty. They understand that the upside could be enormous and the downside, while real, is limited by entry price. The second group buys in the middle of the surge. They feel the momentum. They see headlines. They hear success stories. Their decision is driven less by deep conviction and more by fear of missing out. The third group buys late, when the chart is steep and the consensus feels unanimous. They are not buying potential, they are buying inevitability. All three groups owned NVIDIA. Their outcomes were radically different. When the correction arrived in the years of the 2040s, it did not signal the end of artificial intelligence. It signaled the end of fantasy. Around the late 2030s and early 2040s, the market had valued NVIDIA as though it could grow at extraordinary rates indefinitely. As though energy constraints, regulation, geopolitical tensions, and competition were minor obstacles rather than structural realities. No company grows exponentially forever. Growth normalized, margins faced pressure, expectations recalibrated. Headlines shifted tone. What had once been described as unstoppable was suddenly described as overextended, and enormous amounts of market value disappeared over time. Not because the technology failed, not because the company collapsed, but because expectations had outrun reality. Investors who held through that volatility usually shared two traits. First, they did not see NVIDIA as merely a cyclical technology name. They saw it evolving into infrastructure. Second, they were thinking in decades, not quarters. Infrastructure follows a different rhythm than growth stocks. It begins as innovation. It transitions into necessity. It eventually becomes background. Electricity followed that path. Railways followed that path. The internet followed that path. Cloud computing followed that path. NVIDIA entered that lineage. It evolved from a hardware supplier into a software ecosystem, from a chip vendor into an orchestration layer. from a growth narrative into what some later described as a cognitive broker, coordinating artificial intelligence workloads across industries and across borders. When something becomes infrastructure, the excitement fades. Growth becomes steadier. Volatility decreases. The shareholder base shifts. Speculators rotate out. Pension funds, sovereign wealth funds, and insurers rotate in. The story becomes less thrilling, but more durable. And this transformation was never only about investors. Access to NVIDIA clusters meant access to advanced model training. Advanced models translated into advantages in biotechnology, cybersecurity, logistics, defense systems, and economic planning. For countries, the question was not whether to buy the stock. It was whether to build national systems on top of the technology. Some chose technological sovereignty. Others embraced integration. These were generational decisions, not trading strategies. From the vantage point of the year 2072, the question, should you have bought, held, or sold NVIDIA, reveals more about the investor than about the company. If you treated it as a momentum trade, you experience momentum volatility. If you treated it as emerging infrastructure, you experienced infrastructure time. You would have wanted to buy when it was still a seed. You would have wanted to hold while it grew roots into global systems. And you might have chosen to sell when it stopped being a story and became a utility. There was never a single correct answer. There was only alignment between your time horizon and the company's phase in the cycle. Markets rarely recognize where they are in a cycle while they are inside it. Not because information is hidden, but because cycles reveal themselves slowly. And infrastructure always moves on infrastructure time.